everyone, it's Vish, and wow, what a year it's been for the Australian property market. Property prices didn't just rise, no, they roared. The median house price increased by more than 10% this year already. And for the first time in Australian history, a typical detached home will cost you at least $1 million across any of the capital cities. So the big question heading into 2026, does the boom keep rolling, or do the shifting winds of monetary policy put a dampener on house price appreciation? And even if it does, how do we fix this affordability crisis and get more Australians owning homes? To unpack these themes, I've brought in two of the best. We've got Kiril Ruvinsky from Strategic Investor Group, one of the most interesting thinkers on the Sydney property market. And we have our superstar, Nerida Conisbee from Ray White, one of the most influential voices in Australian real estate. Both of you, welcome to the Livewire Outlook Series 2026 Property Panel. Great to have you here.
Thank you.
Thank you, Vish.
All right, let's kick things off. Nerida, what surprised you most about the Australian property market this year, and how's that shaping your views as we head into 2026?
Well, a lot of surprises. At the end of last year, the market was really slowing down. The rate cuts hadn't come through. But by January, things have really started to accelerate again. So we had 3 rate cuts. Things moved very quickly. And also the strength of markets like Perth, Adelaide and southeast Queensland, they continued to diverge in pricing, price growth compared to what we saw in places like Melbourne, Sydney, Canberra and Hobart.
Mm-hmm. Okay, yeah, Gold Coast, the second most expensive city now. Crazy stuff. Kiril, mate, what about you? What surprised you most about the market this year?
I'd have to say the biggest surprise I got this year was the rise of the buyer's agent and the way they're involved in the property market and across the whole of Australia. If you think about it, 20 years ago, if you wanted to go and buy a property yourself, you had to go and do the work yourself. So you had to go and find the property, you had to make the inspections, visit the real estate agents, do the negotiation and attend the auction all on your own. But today, every time I go and open up my Instagram feed, and all I'm looking to do is get maybe some footage of a cat falling out of a tree or something fun to laugh at before bed. And instead I'm being bombarded by buyer's agents telling me how I can own 5 investment properties and how I can retire at the age of 30 on a passive income of $200,000. So I think that has really changed the landscape from what we're seeing in the property market. The buyer's agents are using software, and the software is identifying locations for them, and we call them hotspots. And we're seeing those hotspots coming up on those scans, and then everyone's piling into that location. So a really great example is the area of Toowoomba, which is about 139 kilometres inland from Brisbane. And that area for 10 years did nothing. It popped up on all the buyer's agents' lists, and all of a sudden you've got median house prices have gone from $400,000 to $800,000 in a 5-year period. So they've all piled in. But the issue is, we believe that long term, property prices usually revert to their mean in various areas, and we're going to see a lot of people come unstuck and get hurt with those types of investments. Wow,
that's really interesting. So you're seeing kind of sudden booms in hotspots in regional towns.
Yeah.
Let's turn to house price growth. Nerida, your data has talked about more than 10% growth for houses. But Kiril, let's start with you on this one. What are you expecting for national dwelling prices next year? I know you specialize in Sydney, so feel free to talk about Sydney specifically too.
Sure. So I get asked all the time to make a prediction and give an estimate for average prices. And I think that's probably best left, because our business just doesn't do that. We don't predict what prices are going to be for the following year. And I think that's best left to the economist here in the room and your colleagues. But what I will say is that when it comes to looking at the data, I think investors should be very, very careful when they're looking at averages. And what I mean by that, I can probably exemplify that with a quick story. Warren Buffett, Bill Gates, they've been friends for a long time. They walk into a bar. I know it sounds a bit like a joke, but they walk into a bar, and in that bar are 10 unemployed bums all having a drink. Immediately, the average net wealth in that bar is $10 billion US. And that really is a danger around averages. And so we're telling investors to be very careful when you're looking at averages and be very mindful of how they invest.
Okay, that's fair enough. Nonetheless, this is a national obsession, and it is a good barometer for housing market velocity, if you will. So Nerida, what are you expecting prices to do next year?
So they have increased it by about 10%, 11% over the past 12 months. We don't expect that growth to continue at that same rate. And our outlook, I mean, we don't make firm predictions, but our outlook has changed significantly, primarily because the interest rate outlook has changed. We don't see a fall. There's a lot of challenges still in the property industry with regards to pricing, and particularly construction costs remain very elevated at the moment. Housing supply is a continued conversation. We're not going to hit that 1.2 million target that's set out by the federal government. And as a result, we do expect housing to remain elevated, but probably not, I think, by the end of next year. Unless we see a rate cut, which looks surprising at this point, we're probably not going to see the same rate of growth we saw over the last 12 months.
Okay, low single digits, high single digits?
I'd say at this point, probably, sort of mid single digits. But again, if a rate cut comes through, then, we could get back to 10%. But right now, that's looking unlikely.
Okay, and if I may, the cities that have a lot of momentum right now, Perth, Brisbane, Darwin.
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 Yeah,
Are you kidding me?
14%.
Darwin. Are you expecting those to still remain the strongest?
Yeah, look, I mean, I spent some time in Perth last week, and Perth is seeing extreme housing shortages at the moment. So when we have a look at listing volumes, even at an immediate level, they're 20% down on last year. We're looking at places where you're not only seeing a lot of money coming in through mining, like we always do, but a lot of defence spending as well. So AUKUS in particular is going to bring a lot more people there. So I think Perth will continue. Gold Coast, Sunshine Coast, continuing to see a lot of population growth moving to that area. And then places like Adelaide, I think, will start to slow. We are hitting affordability constraints in that city.
Okay, all right. So let's then turn to hotspots or suburbs that are priced to grow above, I guess, the averages. Just want to ask this question tactfully because, yes, houses are also a roof over the head for people, but they are also currently structured as an investment. So in that context, Nerida, 2 areas in Australia where you expect house prices or dwelling prices overall to see quite strong growth relative to the average.
Yeah, so coming back to the investment in Perth, or AUKUS particularly in Perth, the Baldivis, Rockingham area is an area that we are seeing very, very strong growth. So the median has increased a lot. So the median was probably 300,000 or 400,000, very similar to Toowoomba, but really backed by not only a lot of first home buyer activity, you've got very high construction costs in Perth, you've got a lot of demand for trades, you've got investors are there, so they're buying up, but you've still got strong rental demand. But then we also have a third group coming in, and that's government. So government is in there trying to buy up homes for accommodation for people that will be working as a result of the construction activity of all the defence, but then the ongoing employment as well. So I think that's probably one area we can expect to continue to grow. Another area, places like Melbourne, I think are looking fairly, it hasn't moved for the last sort of 3 or 4 years. We're starting to see a little bit of momentum. I think perhaps if we start to see a change of government, that would also lead to some better conditions. But then looking nationally, I think anything under those first home buyer caps, where the 5% deposit scheme just seems to be red hot at the moment because you just have a lot of first home buyers now with enough money to get into the market, whereas previously they didn't.
Okay, so specific pocket of Perth and Melbourne in general.
Yeah.
Okay. All right, Kiril, mate, what about you? Two hotspots for investors.
2 hotspots. The one that I love the most, I absolutely love, is Greater Sydney, Greater Western Sydney at the moment. So there is just so much to love about this area, this region. So the planning authority some years ago decided, well, Sydney is a very big city, and so they came up with their 3, it's called the Metropolis, the 3-city Metropolis scheme or program. And what it basically focuses on is, because Sydney is such a large space, you've got the Sydney CBD being the one city, the second one being Parramatta, and then the third one is the area around Badgerys Creek and the Airtropolis region. So they want everyone to be able to live within sort of that 30-minute commute to one major city within Sydney. And so we're just loving the fact that houses are still very affordable in Greater Western Sydney. Through our buyers agency team, we've been buying quite a bit there, and you're looking at houses on sort of 500 to 600 square metre blocks for around that circa 1 million, 1.1, 1.2 million even. So still well under the national average, well under the city average, and some really good buying there.
Okay. All right, so Western Sydney, any other area of Sydney that's of interest to you?
Yeah, we're loving the inner city apartment ring at the moment, so along the metro line. So the thesis behind that thinking is that right now you can buy established apartments for well below replacement value. So what we mean by that is that if a new developer is bringing something to market, because the land over the last 5 years in Sydney has gone up considerably, so the land has gone up about some circa 50%. Construction costs, as we know, is up 30 to 50% over the last 5 years. So the cost for a developer to bring a new apartment to market and market that apartment, they're going to be selling them for about $1.2 to $1.5 million, where you can buy an established unit, something that's already been built there some years back, for sort of that circa $800,000, $900,000 range. So you're buying well below replacement value. So we think there's a real opportunity for the gap, which is the largest gap that we've ever had between apartments and houses, to close. So there's a real arbitrage opportunity there for investors.
Let's talk about caution in the property market. In equities, there's always something to be cautious about. Central banks and share markets falling. In Australian property, when everything's going up, it's like, well, what could go wrong? So, Kiril, if you had to be cautious in one part of the market, what would it be?
I'm going to go back to my first answer, and the reason is because I'm really concerned about what we're seeing. I'm cautious about a business model, and the business model is the property spruikers that we're seeing. So it's just everywhere, and it's unregulated. ASIC isn't interested because property is not a financial asset. So what we've seen recently in the last 2 weeks is APRA's come out and they've said there's far too much investment lending going on, and that's as a result of how easy it's become for people to buy using a marketing company effectively to buy property. So I think the concern is people are buying in areas where they probably shouldn't be without much research going on, and they might be left there long after the buyer's agent has disappeared. So the concern there really is that mums and dads potentially could lose a substantial amount of money. And you heard it here first, but I'm calling there may well be a Royal Commission into the property market. I think the way it's going, there's going to be a lot.
Buyer's agents.
Well, it's not just that. I think that obviously the property spruikers and buyer's agents that aren't doing a very good job. I think that's a very big concern, but there's also the whole idea of the underquoting and that part of the property market that's also affecting what buyers pay, and I think that's really becoming very quite topical at the moment across the country.
Okay, so Kiril, that's a really good point, and so if I may just dig into that just one step further, how do people protect themselves from, I guess, being lulled into these areas where prices are going through the roof, they revert to the mean, like you said, and then they're left just holding they're underwater on their mortgage.
Yeah. So I guess our first advice to clients is do the work. Make sure you do the work. Don't just trust someone else who's doing it for you and sending you some nice marketing or brochure. But more importantly, we look for suburbs that have consistently, for the very long term, just delivered good returns. So we think that if you can buy something that's consistently done it will consistently continue to do that.
Okay.
Rather than looking for a hotspot that hasn't done anything for 10 years and then has had this massive influx of buying and probably won't do anything for the next 10 years.
Nerida, what about you? One part of the property market or system that you're cautious about in 2026?
I guess interest rate increases are probably going to slow the market down. So not necessarily a bad thing, but it will also slow down construction of new homes. And we know that on one hand, inflation is being driven a lot by what's happening in housing, particularly rents, but also construction. But we also know that if you start to increase rates, that also is problematic to getting more supply out of the ground. So I guess that's one aspect. The other one, of course, is the impact of the 5% deposit scheme that we know it is red hot at that cheaper end of the market. And I know why it's popular. I think if I was buying my first home, I would have loved a 5% deposit scheme. But we also know if you're trying to improve affordability, don't stimulate the demand side. And that's exactly what the government's doing.
Certainly, we'll come to that when we talk about affordability, but let's talk about bold or contrarian predictions in 2026. Is there a forecast, a thought bubble that you have? I'm just going to get on my soapbox for a second. I reckon Cairns is the next hotspot in Australia, for example. A lot of retirees want to move to somewhere where it's warmer. I wouldn't be surprised if it comes up in the top 3, top 4 cities in a couple of years. Is there a bold prediction or a contrarian prediction you have?
Well, a lot of regional areas are doing well. I know what you're saying about buyer's agents and how that is creating activity. I think it is for some areas, but I don't think it's necessarily everywhere that it's pushing pricing up. And having spent, I was in Townsville a couple of weeks ago, I'm off to Rockhampton tomorrow, and when you're in those markets, you do get an idea of whether it's an investor market, if there's immediate stress. Perth is interesting. I think if people would look at Perth and be like, oh, that's a boom bust market, that'll clearly go bust again. Whereas, we know that's the past doesn't mean the future will be the same. And so I think, I think some of these regional areas will do well. I think you do need to be careful though. I think you need to fully understand it. And I think this comes down to when you buy property, don't rely on one person for advice. Try to get up there, try to look around, try to get a good understanding, and I think that would be my general advice. There are some really good opportunities in regional Australia.
Okay, and Kiril, what about you? One bold or contrarian prediction?
I'm sorry to sound like a broken record, but I dug out this Sydney Olympics tie in honour of the Sydney property market. I'm going to say that the areas that I spoke about earlier, being the housing market in Greater Western Sydney, is going to blow everyone away, and people just don't see it coming. The spend that's going to be made there at the moment is forecast to be $25 billion to be spent there. So we're talking about new hospitals, we're talking about a new airport, new infrastructure, new tollways. There are 15 new schools going in. So we've never seen an amount of money, it's the largest amount of money to be spent in infrastructure in one spot, and Australia's never seen that before. So that's what they're estimating. But if you have a look at the fact that they spent $100 million accidentally on a Bureau of Meteorology app, I've got a feeling that they might overspend on this massive project in Western Sydney.
Wow, and Kiril, that is a very nice tie, if I may say so. Okay, friends, let's wrap it up with affordability. Now, Nerida, you made a really good point. The government has stimulated the demand side, not the affordability side. And by the time we publish this video, that 2% help to buy scheme is going to kick in. I am scared about what that's going to do to property prices. But pretend you're both in government. You're the Prime Minister of Australia, you've got the majority, you can turn any idea into law and pass it tomorrow. Kiril, what would it be to help affordability?
If you have a look at the way that the economy has gone for the last 35 years, Australia is the only OECD country that hasn't had a natural recession for 35 years. It's the longest in economic history. And the way that the government has been able to do that is by importing people. So by net overseas migration numbers being as high as they have been continually, you're bringing in basically demand. So those people arrive here, they need shelter, they need somewhere to live, they need to clothe themselves, they eat, they go out, they party, they spend money. And so the government has avoided a recession by doing that. So obviously, if we want to avoid the issues that we have in the housing market now, we need to slow that demand right down. And obviously it's affecting the demand side, and that will give the supply side time to catch up. So I'm not saying we need workers here, we need more people here, absolutely. But maybe for a year or two, we could really reduce the amount of net overseas migration numbers that are coming into the country.
I think that sentiment is shared by many, many Livewire readers. What about yourself, Nerida?
Well, the biggest challenge we have at the moment is construction and the cost of construction in particular. So we haven't built enough homes since 2007. Construction costs have gone up, depending where you are, 30 to 50%. Yeah, and what we are seeing on the outskirts of every capital city is that it's cheaper to buy something established than build. And so that's really what's driven a lot of the pricing we've seen on the outskirts. So I think focus on modern methods of construction. We don't have enough trades, which then brings in migration. We do need more trades. We need to migrate them in. We don't have the houses for them to live in. So that's a circular problem we have. But if we focus on modern methods of construction, we move a lot of the aspects of construction off-site, off trades. We put it into a factory. We can start to use robotics. There's a lot with AI that can be done. And we don't use it much in Australia. So go to Sweden, 80% of homes have some form of modular included. Here it's about 5%. But if we could get to those levels, we could really start to get enough homes built.
All right. Well, there you have it. Big predictions and bold ideas from two of the best in the industry. Kiril, Nerida, thank you so much for coming in to our property panel. Really appreciate it.